Hey, welcome to Carter's Corner Pocket, where we fuel the rocket. I gotta make sure. Okay, y'all can hear me. What's going on? How y'all doing, man? I got my GameStop earbud. I was listening to my old streams, and I couldn't hear any bass in any of the songs, so I was adjusting it, and it seems to work when I use my earbuds. But whatever, man. Hope y'all are doing well. Thanks for coming in. Thanks for joining. Today I just want to talk about Michael Pachter. That fool over there with the $6 price target. My laptop's slowing down. I don't know why, but yeah. Some Richard Newton. What else? Larry Chang. Larry Chang. Look at this Charlie Munger quote from years ago. A couple years ago. What we do at Berkshire is simple. We sit on our ass waiting. The key is to prepare while you wait with extreme patience and discipline, and then act with extreme decisiveness. You won't find this in finance books because these principles are hard to teach. Absolutely, like everybody wants to play options, everybody wants to predict the market. Charlie Munger just says just sit and wait, be patient, and that's exactly what Ryan Cohen does, that's what he's going to do with our $4 billion. He's going to hang around, wait. Market correction comes, hit up some companies at a low price, and watch our bank grow. The bank that we are, GameStop. What's it? GameShire Stopaway. Yeah, and then he said this can only happen when the board and shareholders are both long term, and or when the board and shareholders are one and the same. I mean, our entire board invests just like shareholders. Ryan Cohen, largest shareholder. And then you have people like this over here. How can you expect your shareholders to be in it for the long term if you aren't giving them any guidance for the long term plan? Retail shareholders deserve to get some guidance, especially since you raised $4 billion from them. I mean, I'd gladly have another share offering if it were the case. Just accumulate more money, and try and just oppose the short thesis. That's all. But yeah, take a look at Investor place articles. The a couple from Chris McDonald. GME stock warning: two big reasons why GameStop still looks like a sell. They complete. I mean, this has been continuous, right? Even when it was down to $10, even when it was down to $10, these articles were coming out, and now it's doubled since then, since April. Um, and it's still talking about the lawsuit, which we should get into the lawsuit. That's funny if you haven't read it. I've been reading that this evening. The Bed Bath and Beyond lawsuit with Ryan Cohen. We got to pull up a docket. I never thought I'd hear that. Um, Here you go again. Meme stock rally is over. GME stock warning. Here's why GameStop looks like a no-brainer sell. Chris McDonald again. Um, Man, it's late over here. 12:50. I was stuck in traffic. That's why I was a little late. I had to stop by my job. Let's see. The perils of betting on GameStop. Why this meme stock is a sell. Again, once again, August 8th. This dude, Muslim Farouk, he's been writing these articles endlessly. And Gabe Plotkin in Congress, I mean, he said they're going to monitor forums. Their whole I mean, you know the CNBC short agenda is to contact news what like contact short hedge funds will contact CNBC, right, and push out articles. What the hell is that? Okay, investor place. Better get me banned off YouTube. But anyways, same thing. This guy's been writing articles since it was $10 in April. It's doubled. I mean, they're just paid people to put out negative articles to create negative sentiment. Um, Here's another one. Same guy. What the hell is going on? Let's see. Let's go ahead. Yeah, what's going on, man? Most patient investors today's market, they're going to find out just how solid we really are. Absolutely, right? What's going on, Sergio? Man, I'm tired over here. It's like 12:50, man. Um, yeah, I was reading the Ryan Cohen Bed Bath and Beyond court docket. Never thought I'd say that. It's ridiculous. It's so funny what they tell him, what they ask him and his responses. I'm about to pull it up actually. I'm gonna go through it real quick. Let me see. He talks about how he bought and never sold a share. They asked him if he's ever shorted GameStop, which of course his answer is no. But it's just funny the way they phrase their questions. If you haven't seen it, here, let me see. The yellow highlight is Ryan Cohen's responses. They're just trying to trap him into saying something, and he won't give it to them. Here you go. And some of these pages are cut out. Like it's not the whole batch of papers. You'll see the page number skip. Here, you were investing money into GameStop, correct? And then Ryan responded, I have invested since 2019 more money into GameStop, and I've never sold any GameStop shares to date. And you've never shorted any GameStop shares. Ryan responded, no. Not even one, not that I believe. Okay, Mr. Cohen, you don't like short sellers, right? Correct. And I believe that you sent out a tweet on May 15, 2022, saying that taxpayer money should be spent cracking down on hedge funds, short sellers. Isn't that right? Yes. Why did you delete it? I don't think so. So you don't believe that you deleted it? I don't know. Can you show me that tweet? Well, I cannot because I couldn't find it. So then it was deleted, right? It's like it's just useless stuff. Well, let me back up a little bit. Did you delete the tweet? He's like, I have made multiple tweets and comments in the fact that I do not like both hedge funds and short sellers. What is the reason for that? Why don't you like them? I think it's un-American to profit on someone else's failure. It's one thing not to invest in someone's success. It's another thing to profit on someone's failure. And I think it's un-American and it's legal. They're entitled to it, but I don't like them. What do you mean by un-American? I mean, that's my opinion. I don't feel as though people should profit on bet that someone is going to fail and employ tactics in order to increase the odds that they're going to be. that they'll end up failing. And that's what a lot of these hedge fund short sellers do. Why do you feel so strongly about the fact that they're un-American when you're not an American citizen? It's not about being a citizen. Being un-American doesn't mean about whether it has anything to do with citizenship or not. So just basically, yeah, he hates hedge funds. He hates short sellers. If you watch the recent Richard Newton video, he talks about how Ryan Cohen would have, hypothetically, why are you even putting it out there, right? And then you even talk about them taking Ryan Cohen away from GameStop. So you're trying to like pave the way for that or what? I mean, why would anyone even pro GameStop even think that way? But he said he would collude with the DTC to give them shares, and that's what these share offerings were. But whatever. That dude's a whole nother story. I was going to play that later, but Ryan Cohen hates hedge funds and hates short sellers. You can see it right here. But yeah, I don't really feel like reading all of this, but it's really funny because he's like, didn't I? They continuously ask him about Bed Bath and Beyond and and his contact with Bed Bath and Beyond. He keeps answering no, and they keep asking, so you didn't do that? Like, let me see real quick. They ask him like, did you read what your lawyer submitted? He said part of it, and then they keep asking him questions about it, and then this lady's like, how is he gonna know the answer to it if he hasn't read the whole thing? So then they're like, okay, moving on. If you read it, it's more context, but let's see. Hold on. Okay, here you go. One of the things they have said in motion in the papers, they're talking about his lawyers that filed the motion. In the papers that there's very high short utilization rate. Are you aware of that? No, I'm not aware of that. Okay, are you aware of the fact that they have argued on your behalf that the fact that people couldn't short GameStop enough meant that the market for the stock was inefficient? He said we're talking about GameStop or Bed Bath and Beyond. They're talking about Bed Bath and Beyond. Okay, he said, can you repeat the question? He just says that, and then let's see. See, I don't know if he'll be able to answer the question without disclosing information he was told. Um, what am I doing over here? Basically, he'll say, "I'm not familiar with it. I don't know it," and he's just repeating himself, and then he gets pissed off at them. Um, see, he was like, "I read parts of it." He's like, "Okay, it was filed with your authorization. Yes, I approved it." Let's see. Oh no, the funniest thing, right? Papa Cohen. Sorry, I'm like sidetracked. Let's see. That one was so funny. They're like, "Are you the meme lord?" He's like, "No." Where is it? My laptop is going so slow. What's going on? Because I can. What's up, Sharon? Welcome, welcome, welcome. I'm gonna go down. Let me see. Okay, where is that? Yeah, this is the whole short sellers part, right? But then there's somewhere else where it's like meme lord. But they were saying, "Are you the meme lord?" They later said, "No." Are you the meme king? He's like, "Or why don't you?" They asked him, "Why don't you come out and say you don't encourage retail investors to throw all their money in GameStop?" But since when has silence not been enough, right? You don't have to speak on anything. He has no obligation to say that. People invest as they see fit, right? And if you do enough research on GameStop, you're going to want to invest in it, right? $4 billion, no debt. But they kept saying, why haven't you come out and said, I'm not a meme lord, I'm not a meme king? And Ryan Cohen basically said, I don't give investment advice. I don't try to sway people into investing into GameStop in any way. And he clearly stated he changed his mind in Bed Bath and Beyond, and they were like, "So what is the reason why?" He said, "I don't remember. I just changed my mind." He said he only got into it because of the price of Bed Bath and Beyond. It was an attractive price. So then they kept saying, "What?" They kept saying, "What's the what is it? What's the reason you invested in Bed Bath and Beyond? Why did you invest in calls?" And he kept saying It was an attractive price over and over and over, and they kept questioning him. They keep trying him to slip up and get something because they're after him because they know he has them beat with the $4 billion of cash. And if it keeps going up, he's only going to offer more.
Bush
Probably
analyst
another
Michael
share offer
Pachter
and
to
gain more
discuss. He has
money.
a
But
sell rating. Price.
here we go. This video is supposed to be about Michael Pachter. This is another video. He compares like you'll see it. Don't worry about it.
I think it's like McDonald's selling groceries by saying all the people who come to McDonald's eat, so we're going to sell them produce and toothpaste. It's so stupid. No, won't work. So I think that GameStop is its path to dodoism is accelerated because they're burning cash. And at the rate they're burning cash, they run out of money next year. So let's sit back and watch. And if you own GameStop stock right now, God bless you. Good luck. But I don't see the value there at all.
Understood.
All right, listen to this now.
It's 650. Closer to that. You're right on the sell. Is the dream over?
Oh, I think the dream never started. You guys have a documentary out right now. I think it came out yesterday called The Meme King, calling Cohen a meme king. He's the Queen of Hearts. He was displeased and he said, "Off with his head" to Furlong. That's the CEO's name that they shall not name. I mean, it's like if he said his name in the press release, he'd be cursed. They brought 3 Amazon executives in 3 years ago, and they managed to. One departed after 7 months. I think she figured it out quickly. The other was fired after less than 2 years, and the third one was fired after just under 3 years. So Cohen brings people in, doesn't actually tell them what to do, and they don't fix anything, and they're gone. I don't think he has the first clue how to turn this company around. And the truth is, I don't think they can turn it around. I think that they should be in harvest mode, trying to generate profits on a smaller footprint, and they're just not doing that.
I mean, are they going to figure out how to be Domino's Pizza and not Blockbuster here somehow? Because so many trends in gaming are going against them. We just had Apple announce the Vision Pro. You can bet that's going to operate on an app store. You're not going to be going to GameStop to get games for your Vision Pro. And then you've got the cloud gaming and streaming happening. Microsoft pushing hard on that, as well as others. What's the path to life here? What do they have to do?
So Cohen's solution is blockchain gaming. And of course, if you own a console, an Xbox or a PlayStation, you think of GameStop first if you're going to play a blockchain game. You would never think to actually go to your PC. The guy has no clue, not the first clue. They are Blockbuster. And absolutely physical retail is going away. It's not going away tomorrow. It's going away when the PlayStation 5 and the Xbox Series X are done with their life cycles. It's got another 5 years, maybe 6 or 7. But they should be harvesting that cash and trying to figure out what they can do with it. Instead, he's not paying his bills. Take a look at their accounts payable. 50% of revenue in the quarter is accounts payable. They literally have 6 weeks outstanding of payables. If they keep that up, no one's going to advance them any more products. So they're going to accelerate their demise. I think it's really crazy.
Yeah, I guess not paying your bills is tougher when you need to be advanced product. Elon Musk doesn't have that problem at Twitter. So this is tough to short, though, I imagine, because there's a lot of excitement. This used to be a meme stock, so it could go any way on you, couldn't it?
It could, and it still is a meme stock. And I think in the documentary, I'm not sure they use this piece, but I called him the Pied Piper, and the retail investors are the rats following him off the cliff, and they don't see it coming. They're happy. They're listening to his piped tune, and they think he's a genius. I mean, I'm sure he is a genius in other areas, not in games.
So what is the anti-GameStop, though? We know how you feel about that, but in this space, what are you extra long?
Activision, because the Microsoft deal is going to happen.
I mean, this guy absolutely despises Ryan Cohen. He used to talk good about GameStop back in the day, before Ryan Cohen, of course, when George Sherman was there. But he said GameStop has 5 to 7 years. How's that working out, right? With all our cash over here, 5 years, and he has a $6 price target on GameStop. This guy's disappeared. He's gone on the side of a milk carton. He only showed up one time when Roaring Kitty came out, and of course it's negative. Listen, this one's ridiculous
Did
too.
surge today after the Reddit account that drove the meme stock mania of 2021 posted again what appeared to be a more than $116 million position in the video game retailer. Now, when the stock rallied a few weeks ago, following a related post, the company capitalized on the stock's jump, selling 45 million shares to raise nearly over $900 million. And Excess says GameStop could execute that same strategy again, and that there's nothing fundamental to support the valuation at this level. Joining me now is Michael Pachter, Managing Director at Wedbush Securities. He joins me again. Michael, I'm sorry to bring you out here every time we get this GameStop
Dude couldn't
rally,
even
because
shave,
I
and he's
know that
going on
we've
TV.
talked in the past about the fundamentals, and you just don't see the business doing well or possibly even existing. Just remind us your core thesis on GameStop.
Oh, sure. Their core business is that they sell physical video games. So they sell the physical discs that games are printed on, and they don't sell digital downloads. They can't. They can sell gift cards, but the console makers require you to buy digital downloads through them. So you can't even buy Madden football from Electronic Arts. You have to buy it directly from Microsoft or Sony. So that business has been declining since 2013, since the console makers really put giant hard drives into their consoles, one terabyte type hard drives. And, so
Right there, he says you can't even buy Madden, right? Digital download. What about the digital store? And at this time, he's doing this interview. The digital store was live.
People download games, and we have a whole generation of gamers who just don't care about physical. The digital download is the same exact file, costs the same. So the only advantage to buying physical is you can trade it at GameStop. That business is dropping about 3% a year. And in the meantime, GameStop has had to cut stores, shrink their store count in order just to stay afloat. But they're not profitable. Ryan Cohen came in and said he was going to make them profitable and has not yet done so. And so the last time Roaring Kitty reared his very handsome head, he had a good thesis that Ryan Cohen might turn the company around and they would squeeze the shorts. That's dead. We're 3 years later. There is no strategy. There has been no execution. There's no senior management left at the company. It's a terrible company in a declining business with no strategy and no solution, but they have a lot of cash.
Yeah, that was going to be my point, but they have a lot of cash. So can they do something with that to turn around their fortunes?
Absolutely. And the cash is worth cash, so they have right now probably just about exactly $2 billion, $1.95 billion or so of cash. And they can buy something for $2 billion and it's worth $2 billion. But the stock, at 30, I guess it's at 26 now. The stock is trading at, something like $10 billion. So, they have a couple of billion in cash and they can turn that into a couple of billion worth of assets, not worth $10 billion. And, if there's a business out there selling for $2 billion that's worth 10, why don't we buy it? Why doesn't somebody smarter than them buy it? No, it doesn't exist. So yes, they can invest this capital and buy something that will keep them profitable for a long time. But are they particularly smart? Are they, do they have any competitive advantage running a different business? No. So why? I would say that the smartest thing they could do would be to try to sell the brand off and liquidate and pay the cash out to shareholders, in which case it's worth somewhere between $6 in cash and a couple of dollars for the business.
Which is where your price target.
This guy's nuts. Are you crazy? Just sell the business, get rid of it, and give out the money like $6 a share to shareholders? This is ludicrous, right? 2 months ago. This is 2 months ago. We had $2 billion at this point. Now we have four. This guy's just allowed to keep spouting off at the mouth straight lies. He's either short GameStop, which he's continued this for so long. Like, I don't know, either he lost a ton in GameStop or he's being paid by someone to spit this out. GameStop to close their profitable business. This is so stupid. Yeah. Thanks, Morantz. What's up, man?
5
We
cents
have
all the way
going on
down
over
to
here.
14, but that's when your profitability, if it continues lower, starts to really ramp up. So combo type trade, bearish risk reversal on this one where you're buying a put financed by the short call.
And what's the short call strike again?
16.
Oh, wow.
Yeah, so
All
just
right,
about a
bold
buck a buy.
trade.
Now, the
Oh, it's
plan
this
now
fool over here.
Tom
Still
here with
can't
me.
even shave.
Joining us, Michael Pachter, is Managing Director of Equity Research at Wedbush. We'll throw another stock in here too today in our discussion, but let's start with GameStop. Michael, where are we at in this company? How can they convince investors that
Who has
they've
a
got a
picture of
plan?
themselves behind them?
Well, it would be good if they could just articulate the plan first, and then maybe we could embrace it and endorse it. They've never said what they're going to do. The plan 2 years ago, 3 years ago, was to just be like Amazon, and they hired a bunch of Amazon people and then fired them. There is no plan now. The plan now is that maybe Ryan Cohen is the next Warren Buffett, and he could take their billion plus of cash and turn it into several $billion. But that's a pretty dumb plan. I mean, I think investors do better with mutual funds.
Yeah, look at Chewy. So so much for the Buffett strategy of buying and holding because Chewy's gotten obliterated. How does it function as a business right now? Like, what's going on there, Michael? When it's been now multiple years with so much opportunity,
Still relating
to
Chewy
capture on the
to Ryan
zeitgeist,
Cohen has nothing to do
and
with
it doesn't
him.
seem like they have. I mean, like, are they just letting this thing die or what?
Well, not intentionally, but yes. The business is dying for the same reason that the typewriter business died, in the buggy whip business died. Technology has allowed for digital downloads of exactly the same content at exactly the same price with a lot more convenience. So the only thing GameStop has to offer customers is the opportunity to trade things in and get value for older games. And obviously you need a physical copy in order to do that. So there are some people hanging on, clinging to the opportunity to trade in. That's great. But the business has gone from, $2 or $3 or $4 billion per quarter to $2 billion. And it's shrinking every year. It's not going to rebound. Digital downloads are increasing. And I think that trend is going to accelerate when the store fees decline online, when Xbox and PlayStation.
Yeah, okay. That's enough of Michael Pachter over there. I mean, as you can see, we have our digital storefront. It looks nice. It runs smooth. My laptop, I don't know why it's slowing down. So like, it's just not running so smooth. But just the contrast theme, everything of our digital store looks nice. Ryan Cohen, the omni-channel marketing, making sure everything on the website, your phone, your cell phone, it all matches up, right? In store. That's part of it. Just getting it to the customer in many different ways. Thinking of the fewest amount of touch points to check out. All of that is being considered because Ryan Cohen goes into every single detail. Um, yeah. Moving on. Oh, this is what I want to talk about e-commerce, right? Because Michael Pachter is all about the physical storefront. We're gonna lose money. That's all we do. E-commerce is big. E-commerce is huge. People pay more money online, but and Ryan Cohen's a master at e-commerce. Listen,
But ultimately, it's all just capital executive, or whether I'm investing in a business. I mean, it's capital allocation, and more involved. You're more involved as
it's
an
over here. One
executive as
second.
opposed to you. There's not much of a decision you can make other than buying. And I think in general, I'm in favor of more freedom for people.
This is actually the last tweet we'll be talking about. So thanks for being such a good sport. Moving on. For a long time, e-commerce was said to kill off retail stores. Now e-commerce giants like Amazon are getting into brick and mortar stores. What are your thoughts on the future of brick and mortar?
I think if you look at e-commerce penetration as a percent of retail, it's still under-penetrated, and I think that just generally, I'd rather be an e-commerce company than a brick and mortar retailer. So,
are you a gamer or did you game as a kid?
Right there. I'd rather be an e-commerce company than a brick and mortar retailer. I mean, that's all he's done. He's transitioned the company to e-commerce centric, right? GameStop was neglected in this interview. He talks about GameStop being neglected for decades. Everything from the employees to the business storefront, the just technology stack. So he's taken all of that time. He even talks about it in that court hearing thing. It takes a long time to turn that around, and kick out all the bad apples. He's done all of that. We're on a clear turnaround. You can see our cash, the pure cash position, expenses going down. All he does is talk about cost cutting, even in this interview. But yeah, I mean, it's just such a clear cut investment if you look into the details. You would think these analysts on CNBC would, you would think they'd actually look into the details before they report, if it were true. But we already know, right? They work for other people, short hedge funds, pumping out fake news articles.
Whatever regulation that you guys.
And this right here, sorry, I'm all discombobulated, but Gabe Plotkin. Congress is asking Gabe Plotkin, the person that got us here, one of the people that got us here, one of the main actors, how we fix this. And Gabe Plotkin talks about monitoring message boards, basically data science.
Guys come up with certainly, will abide by, and I look forward to, helping, if you guys want to have future conversations about that.
So I wasn't ready. 251.
Some degrees, markets are self-correcting.
And so I guess from our standpoint, and I don't have much more time, but what do you recommend to us to try to keep from letting this happen again?
Look, I think to some degrees, markets are self-correcting. I know, moving forward, stocks, I don't think you're going to see stocks with the kind of short interest levels that we saw, prior to this year. I don't think, investors like myself want to be susceptible to these type of dynamics. I think there'll be a lot closer monitoring of message boards. There'll be software providers. We have a data science team that'll be looking at that. Whatever regulation that you guys come up with, certainly, will abide by, and I look forward to, helping, if you guys want to have future conversations about that.
Yeah, there you have it. Gabe Plotkin's going to give some advice on how to prevent this, right? Because he did it. Here's the forum monitoring for you. Social media platforms, it monitors everything. Just sentiment analysis, all insights, mentions of your company, trends, all of that. So that they're just one step ahead of everyone. It's basically big data. That's all. But moving on from that, I just want to look at this is Pokemon Trading over here. Another Pokemon Trading. That was my last stream. But it looks our trading card business is doing well. I've been monitoring it. It just bumped up. It just bumped up from like 4,700 to over 5,000. We just got like 300 more cards. There was all of these cards over here. Let me bring it up. I added to the cart to take a look and see. Let me see. Just to take a look and see what's going on. What the hell is the other one? That's it right there. Here we go. All of these cards. There's like a Kobe card, Ovechkin, Curry cards gone. Every single one of these are gone. All of these. I don't even like Luka like that. I was just checking the value on it. LeBron. All of these cards are gone. But here you go. I'm just gonna play this and compare.
And we're
the
going
price
with
of
this
GameStop.
PSA 9 Glaceon V alternate art from Evolving Skies. One of the reasons I chose this card is because it does have a decent amount of buy-sell data right from eBay sold listings. And with the data from the eBay sold listings, we can confirm that this card is selling from anywhere at $80 to $90. The next step is to go inside my GameStop, so here I am in front of it, and I was not allowed to
70,
record on the inside, which is perfectly fine. That is GameStop's policies. I did manage to snag this picture right here of the card reader, which does show the trade-in value that I would be receiving.
He got 63.75 credit. With eBay fees, it's 64.66. Who the hell wants to package up their stuff, go drive to FedEx, ship it out, and deal with customers, right? Like returns and all of that, or complaints, or just people trying to say you sent them a fake and swapping out the card, right? I mean, You don't have to deal with any of that at GameStop. And we take in cars that aren't as desirable too. So I mean, it's just an easy way for someone to drive and take it and turn in the car, get cash straight up. And we're gonna get more in when people are hard up. I mean, times are hard, right? It's basically a recession. Um, People are gonna start turning in all their slabs, getting cash, extra cash to pay the bills.
Receiving for trading in the card. I did go with the in-store credit option, as here I am walking out with a GameStop card, but let me go ahead and talk more about my experience a little more candidly for all of you. Right off the
And that's one thing. This dude reminds me of a brown Ian Carroll. But see how he got trade-in credit, right? That's just money coming straight back to us. Every single person that I see trades in their cards, they've walked away with more product from GameStop. They go in, trade it in, and they get their trading credit, obviously, because it's more value. So they buy more, buy more product from us. It's a win-win for us. Even if they don't, they're already in the store. That's a win for us. Even if they don't go through with the purchase or trade in or whatever.
let's just talk about the thing that everybody wants to talk about. How much money did I get? So if you notice in that image before, I'll put it on screen again, $63.75 is what they offered me of in-store credit. They did offer me around $54 of cash. The payout options for cash were obviously cash, Venmo, which was a little unexpected, and a prepaid card that I assume would be a debit card of, like from Visa or something that you'd be able to swipe at like Walmart's or Target's or whatever. I did show earlier last sold listings for the Glaceon. I'll put them on screen again. $80 to $90, let's average that out at $85. So the in-store credit value they offered was $63.75. If we set our average price at $85, the in-store credit option is sitting right around 75% of market value. And it seems the cash value was around 10% less.
Which isn't true, because with eBay fees, it comes to like what, 64, 66 after PayPal and eBay fees. So it's right on point. And it's more secure because you see the process that our employees, right, go through. I said our employees, GameStop employees go through.
Less, which in the grand scheme of things is really not that bad. I have seen people on Facebook Marketplace, Facebook buy and sell groups, card shops, card vendors at conventions offer way less than that. While I have also seen some offer more than that. But do remember that the higher value is something that you would have to use at GameStop because it's in-store credit. You can't really cash out on that. Now moving on to the actual intake process, they did have somewhat of a checklist that they should be looking at. Unfortunately, they could not give me the checklist, but it seems I did find one online, and I can say that when they went through the intake process, they did go through this checklist. They used a magnifying glass to look at it, they put it under a black light, they did check the corners, they checked for scratches, they did all of that, which is great.
See, I mean, they're very thorough. I checked all of mine that have come in. All of them are real. They're certified and everything. But and this dude, he continues on and make like I don't understand what's with these people in hypotheticals. He's like, what if you get a card that the barcode is switched? Well, the GameStop person scans it, the employee scans it, and it pops up on the screen, and you match it up. But I just feel there's so much negative sentiment just with hypotheticals. We've already heard this Jim Cramer, right? The hedge fund playbook.
Welcome to Wall Street.
Y'all know that. You pump out fake news to CNBC. I don't need to play it again, but here I really wanted to play this. This fool, Richard Newton, man. Just the weak mindset that he has. Acting so pro GameStop and then coming out with these videos, especially the Marantz, if you're still here. I used to watch Richard Newton back in the day. Like, I agree, he's boring as hell. I fell asleep so many times to him. Then when you were like, go watch his video of with the shareholders and everything, the shareholder letter that he was creating. I didn't even watch those videos because they were so boring to me. But yeah, he was like, as a shareholder, holding, I don't know how many shares, 100,000 shares. Well, I don't even know, $100,000 worth of shares, whatever it is. He's like, as a shareholder, I demand GameStop tells us a plan. You're talking to the dude with 36.8 million shares, right? I mean, he has the number one reason. He's the number one shareholder. He has every reason for GameStop's share price to go up. And Richard Newton's over there demanding Ryan Cohen gives him an answer, or the board gives him an answer. He's just trying to pump himself up in his own mind. But listening to this is ridiculous.
I never really thought about this too deeply, like this idea that MOAS could be kind of like a thought virus and turn people off of like ideas until yesterday. I was like, wow, like if you really strongly believe that MOAS is going to happen, then like, yeah, what I said, super offensive. And it just didn't occur to me because like, I'm not convinced of MOAS. I'm just not. And for several reasons. The first one is, I've said in the past, I don't think the system can support it. The system will do everything it can to protect itself. And like, maybe people are thinking about the system as like, I don't know. I'm trying to like, guys, like the system is, this thing is huge. Here's the Federal Reserve. You know, this thing is an entity unto itself. It's not federal. It's not part of the federal government. It's not even a reserve. And who owns the Federal Reserve? The same banks that it supposedly SROs, self-regulates. So here's all the banks sitting around the board table of the Fed. This is JP Morgan. This is Citibank. This is Bank of America. This is Citadel. They all sit at that board and they own the Federal Reserve. And these guys' only like desire in life is to own more of the Federal Reserve. Because whoever owns that is the ruler of the universe. The Fed runs this whole show. It runs every country on earth. And the DTC, actually, technically it's the DTCC, is a subsidiary of it, owned by its market participants like Fidelity, Vanguard, BlackRock, etc. Right? So owning more of the bigger guy is your whole goal. And like, think about UBS here for a second. UBS basically had been battling for over a century with Credit Suisse and just got to take their spot at the table, right? So they just got a bigger chunk of the Fed, the International Bank of Settlements, of the whole system, and correspondingly the DTC. They have more voting power now in the Dune universe. This would be the Cohen company, most powerful force in the Dune universe. And if you're a royal family in Dune, or the Bene Gesserit or whatever, your whole goal is to get more director seats of Cohen, right? And like Herbert knew exactly what he was talking about. This is the reality we're facing. GameStop is here. Actually, let me fix that. This is GameStop. And so if the Federal Reserve Board, through the DTCC, comes to you as GameStop and says, hey, GameStop, we just had a member default last year. And the new member that took on their position that basically wants to unwind this thing is prepared to offer you a really good deal on their position that their member via Archegos sold shares at for some like ridiculously low price, like probably sub $5. You know, because this is like old bags. These are old. Would you take like $25 a share for these things and, you know, let this person off the hook? Because it's not ours, right? It's not technically their fault, although their system encourages this kind of behavior. And Ryan Cohen's like, is this an offer or a suggestion?
This is all his hypothetical, right?
Or a requirement, right? Because you know that my shareholders are going to hate me for life if I take this deal. And they say, well, you know, if the stock price goes berserk for some reason in the middle of 2024, and you happen to just issue out, you know, say 120 million shares, and we do our best to buy as many as we can to close out this position, they would never really know the difference. And you guys would have a whole bunch of money, and then all these lawsuits, you know, might just go the other way. You never know. This is just me playing this out hypothetically. Ryan Cohen, while he's a billionaire, people are going to say he's an oligarch. He's a dude. He's got a small child and a wife, you know, and a life and just a normal thing. And he's being approached by, this is the most powerful people in our universe. And it's like, people are saying there's no way Ryan Cohen would collude. This isn't collusion. If the Federal Reserve and or the DTC approaches you, you are in no bargaining position. Because when you entered into an agreement to list your equities on their market, you now became a total subsidiary or beneficial partner of their system, and they own you, lock, stock, and barrel. So like the idea that Ryan Cohen could rebuff this and say, nah, you know, you guys are on the ropes here. How about you guys just let this thing squeeze and destroy the whole financial system because these shareholders, that's what they want, you know? Like, there's no way he's going to do that. At the end of the day, you know, they could undo him. They could take him away from us, you guys. Like, you know, if he was presenting a situation that was like disorderly for them or threatening to them, he wouldn't last long. So like, you think that our votes matter? Like, I don't know. So I just.
That's someone with a weak mind, someone that just can't handle it. He can't even fathom the fact that Ryan Cohen wants to fight these people. Ryan Cohen has that dog in him. He has the fight in him. Like, he's made so many $billion. He could have walked off into the sunset, be done with it, right? But he wants to be an activist. He wants to invest. He wants purpose in life. He wants to leave a legacy. It's about his legacy. He's not going to sit down and submit. Maybe Richard Newton would. That's complete beta male talk. That's complete beta talk. He just can't handle it. He's never been in situations like that. He can't fathom that Ryan Cohen can do it. He's good. He tries to compare, like in his mind, he's like in his small share position compared to Ryan Cohen's, he's just as important, and he deserves answers. And he talks about Ryan Cohen leaving GameStop. This guy has to be a paid shill. He's gone off the deep end after his T plus 35 hasn't worked out. So ridiculous. What's up, Almo? Yeah, exactly. In the beginning, and then you hear his. I should have pulled it up. You hear his letter to the board, demanding a response and a plan. Who the hell is he? He's just one investor, and I bought more today. I hope y'all did, but that's my own thing. But yeah, going on. Larry Chang, man. Talking about what's it, Berkshire Hathaway, and the investors need to be aligned with the board, and they're one and the same, and that's exactly what we are, man. Um, yeah, that's it. I mean, there's nothing more. We're rich. We've got a lot of cash. We've got a management team that's forward thinking. Um, there's nothing more to say. The we have no obligations. We're not over leveraged. Uh, the, what else? What else do you need for a great investment? E-commerce turnaround only improving every single like quarter over quarter is improving massively. The only negative thing they talk about is revenue declines because stores are strategically declined, right? But yeah, that's all they have, and they'll continue spewing out that stuff, man. Um, I gotta go to sleep right now. I'm tired, man. I got stuff to do. The kids are going to school. I went to the kids' school today, early in the morning to drop off supplies, all of that. Worked, watch kids. I'm lucky, man. I get to watch my kids while I work, even though that's stressful as ever. And getting calls from my wife because she's pregnant. She's like 4 months pregnant. It's crazy, but you gotta have dinner ready, man, and work and research and follow GameStop. Do everything. I picked up my Madden today. I went in with my GameStop logo shirt, and the dude's like eyes, like it was the new logo on the headphones. His eyes like lit up. I think he thought I was a mystery shopper or something like that. But I picked up my Madden. There were like 2 copies left, and there was a long line of people picking up the pre-orders. So that worked out for me. But I wanted to end it early in the game, but I'm too tired, man. It's like 1:30 in the morning over here. But anyways, guys, yeah, our trading cards is awesome. I saw some Disney cards also, uh, sold, gone. I was gonna buy one for my daughter. It was a PSA 10 Princess Belle card. It was like 200 something bucks. The value was like 300 on eBay. I was gonna buy it for my daughter, but all of these are undervalued over here. Like they'll be selling for like 150 on eBay, and over here it's 118. We're selling it for, but as you can see, we were 4,700, 4,800 yesterday. It went up over 5,000. Now it's 4,900. It just keeps on fluctuating. And here you go. Here it is. The other day I was looking for this 750 trade in credit. They only had to raise it because we're like our business is improving. They're constant improvements to the trading card PSA card thing. They're unlimited estimates now. It used to be five. They're just constantly evolving as time goes on, addressing customer complaints or you know suggestions. Um, that's how we do it over here at GameStop, man. But yeah, I'm gonna head out of here, tired as ever. I'll try to get back in like a couple days, something like that. Have a good weekend. Be safe, y'all. Peace out. Can't stop, won't stop. GameStop. Peace.